Welcome back to Accounting 201. We're going to look at preparing an income statement, this time a multi-step income statement. So let me start with a quick screen share. We're working on exercise 5-6 from our textbook. We've been asked to prepare an income statement for the month ended January 2017. We've been given various account names and the dollar amounts. Always be careful that you're taking in only income statement items into the income statement. You may be given some extra information, so always look through it very carefully. We've been asked to prepare an income statement, a comprehensive income statement, and to calculate the profit margin and the gross profit rate. We'll take care of that last part a little later. We have to first start with the income statement. So for any financial statement, we always start with, in the first line, the name of the company. So in this case, we'll write your company. Second line, we identify which statement we are preparing. Here it is the income statement. In the third line, we will identify for what period it is. So it is for the month ended January 2017. Now a simple income statement would have revenues minus expenses, giving us net income. We still have that. It's just that expense portion that we're going to have in detail. And even the revenues, we may have some details. So I'm going to first give you the outline of the income statement, and then I'll show you how I would proceed with the information given over here. So to start with, I have a calculation for net sales, and then I'll have a calculation for gross profit, which is also called gross margin. And then I have a calculation for my operating income, and finally, my net income number. So what we have over here are numbers that are important. We need to arrive at those numbers. And in order to arrive at those numbers, we have to find the additional information. There are a couple different ways in which we can go about this. One is first create the shell of the income statement as I've done over here, and then go and look for the information from here and bring it in over here. So I would prefer going through the account names, identifying what they are, see where I'm going to position them, and then I can start going through them rather quickly. So first is cost of goods sold. It's an expense. Net sales minus cost of goods sold will give me gross profit. So I need to put that in between over here. So for that one, since it's a known location, there's only one place I can put it. I'm going to go ahead and bring that number over here. And I'm going to write the amount over here. And you will notice that the amounts that need to be subtracted, I'm going to put those in parentheses because I'm using Excel. It makes my calculations easy as I go along. Operating expense, once I've done with my cost of goods sold, your other major group of expenses are going to be operating expenses. So I have freight out, which is an operating expense. I'm going to highlight this in yellow. My entrance expense is an operating expense. Salaries and wages expense is an operating expense. Income tax expense is always listed after operating income. So I'll hold off on that for a second. Rent expense is an operating expense. So I have 4 expenses identified. And if I quickly glance down over here, all of these are sales items, and then I have other comprehensive income. So it means these 4 items need to be listed as operating expenses. So I'll first write the word operating expenses, and I've put this in italics, underline, and I put a colon over here indicating that this is a grouping of items. I have freight out, $7,000, entrance expense, $12,000, salaries and wages expense, $60,000, a rent expense is $32,000. What most companies do is they will list these expenses in the order of magnitude, as in the largest amount first, and then it goes down. Now it's relatively easy because we have only 4 items and we can find the largest number. The first one is salaries and wages expense, and that amount is $60,000. The second one is rent expense, and that's $32,000. And then comes my insurance expense, and that is $12,000. And finally, my freight out expense, which is a selling expense, and that's $7,000. I could have also just listed all of these items and sorted them in Excel. your 4 items so we can just visually look at them and we can identify what they are. Now, I have entered all the expenses over here. I had income tax expense, and that one I'm going to place over here after my operating income. Income tax expense, and that amount is $5,000, the income tax expense. So at this point of time, I have dealt with all of these items. So I'm going to do a quick strike through over here to indicate I've dealt with those items, just to know that I'm not going to put them in twice or forget to put an item in. Now, the next item I have is sales discount, sales return and allowance. These two are contra revenue accounts, which means they have to be subtracted from revenue. So let me first look for the revenue account, and that's this amount of $370,000. So my starting point is always my gross sales or my gross revenues. Here we're just calling it sales revenues, $370,000. I take my sales discount and sales return and allowance, and I'm going to subtract them. So those two items are listed over here. And you'll notice these two, I have put them in parentheses to indicate they need to be subtracted. So once again, I'm going to come over here and I'm going to strike them out to indicate I have taken care of it. So I've taken care of all the items over here except comprehensive income. That doesn't come in the income statement. That's going to come further down. So I can stop for now with this to finish up my income statement. So what I have over here is, once again to recap, I write the header, I bring in the sales and the expense, all the numbers in over here, but they have to be grouped. The first grouping that you have is to arrive at the net sales number. So gross sales minus my returns minus my discount will give me net sales. When I compute that number, I get $342,000. So this is step one. So calculating this portion is step one. Once I have my net sales number, I subtract my cost of goods sold number that was given to me. That gives me my gross profit. So in this case, it is 342 minus 212. That gives me 130. So this is my second calculation that I need to make. So I'm going to put this over here in parentheses. Not in parentheses, in this highlighted color. Then I had all my operating expenses. Whatever the numbers are, I bring them all in, and I brought them in the order of, descending order of importance in terms of dollar amounts. I want to find what my most expensive expense is. So obviously in this case, it's my salaries and wages. So these items, when I add them together, it's nothing but just my total operating expenses. It's just a subtotal. But I need that subtotal, my total operating expenses, in order to calculate my operating income. So this is another subtotal I need to now calculate. And this is calculated as 130 minus 111. That gives me $19,000. That's my operating income. On this $19,000, I pay taxes. My income tax expense is $5,000. That finally gives me my net income of $14,000. So this is the last number that I need to calculate over here in the income statement. So what we're looking at is numbers that are given to me versus numbers that I need to calculate. So net sales is your gross sales minus your returns and minus discounts gives you your net sales. Net sales minus cost of goods sold gives you gross profit. Gross profit less your operating expenses will give you your operating income. Operating income less your income tax expense gives you your net income number. Now let's carry on with the last portion. Remember, we had this other comprehensive income, which is a net of $4,000 in taxes. So we first start out with the header. The header is very similar to what we had for the income statement, except that we call it comprehensive income statement. The starting point over here is the net income number from this previous statement. So it's really a continuation of the income statement. We either add or subtract the other comprehensive income. In this case, it is comprehensive income, they've told us, so it's a positive number, which means we need to add $2,000 to the $14,000 we earned in the current period. That gives us comprehensive income of $16,000, and this number will then go into the statement of owner's equity. It goes into retained earnings. So now that we've seen this, we've taken care of even this last piece of information that was here, again, I'm going to strike out. So I know that I have taken care of all of these information. So first thing you need to do is eyeball all of them to make sure they belong to the income statement or the statement of comprehensive income. If they don't, just strike them off so that you know you should not bring them into the income statement. We prepare the income statement and the comprehensive income statement. Now, in the last part, they've asked us to calculate the profit margin and the gross profit rate. Here, what we're looking at is they want to know for every dollar in sales, how much did we make in profit? And there are two profit numbers, as you've seen, the gross profit number and the net income number. These are both profit numbers. So I'm going to take off the highlights over here so we no longer have that. I'm going to take it off. Okay. So this number, I need to highlight this number now because that's the one I'm concerned with. The net sales number, this is in the income statement is always the 100%. That's a base number. So what I can do over here is I can do any number divided by itself is going to give me the percentage that I'm looking for, which is 100%. Okay. Now, all the other numbers you want to state it as a percentage of sales. So for gross profit, it is 130 divided by 324. So gross margin divided by net sales. So again, let me do the formula over here. It's going to be let me change the font color. So 130 divided by 342 is 38%. That's basically saying for every dollar in sales, I have 38 cents in profit, which means 62 cents is the cost of the goods sold. Then the next number we're concerned with is the profit number, the final number, the income statement number, net profit number. Again, what we do over here is we will calculate the rate, which is net income divided by net sales. And let's state it as a percentage, and we get that at 4%. Okay, so 14,000 divided by 342,000 is 4%. So the gross margin is 4%, gross profit rate is 38%. So what's the most expensive expense? Cost of goods sold. The items I purchased itself is expensive, which is 62%. So for every dollar in sales, 62 is going away in the cost of that item itself. Then we have a whole chunk going in expenses, leaving us with a 4% profit margin. So as you can tell over here, the multi-step income statement provides a lot more detail. And this is the income statement that companies prepare for themselves internally. And they look at this at great length and try to make decisions about the future based on this. A lot of budgeting and planning is done based on this multi-step income statement. So as you've seen, these are all the numbers that come from the information that you learned in this chapter. In particular, items such as cost of goods sold and the freight out. Those were items that we dealt with at length in this chapter. So this is an overview of the multi-step income statement. Next, we're going to take a look at a different exercise that deals with the periodic inventory system.